Hello everyone, I'm Rakshith Pai and today I'll talk about one such company that was on the verge of bankruptcy. And as you all know, if a bank becomes bankrupt, it will start a chain reaction that could affect every other sector the bank has exposure to. We are good for now as the bank is recovering from its wounds. Yep, I'm talking about Yes Bank Limited. Is it worth investing? Business introduction. Yes Bank Limited is a private sector bank. Yes Bank provides banking service to businesses, institutions including corporate and institutional banking, financial markets, investment banking, corporate finance, wealth management, etc. Yes Bank was founded in the year 2004. Currently, it is India's 7th largest private bank in terms of total assets, ranking 7th among the country's 18 largest private sector banks. Yes Bank has a pan-India presence with 1070 branches. Fundamental analysis. Yes Bank's market cap is at 34,500 crores. Its total asset is at over 2.88 lakh crore with advances at 1.72 lakh crore, out of which 49% to corporates and 51% to MSME and retail divisions. Yes Bank has been trying to minimize its corporate advances and is on track with it. Gross NPA and net NPA stood at 15% and 5.5% respectively. Net NPA, the recovery is very slim. Yes Bank's NPA is very high compared to banks such as HDFC and ICICI. And capital adequacy ratio, this is to check whether the bank has sufficient capital, and it is calculated as available capital divided by risk weighted assets. It is at 17.6%. The limit as per RBI is 9%. Anything higher is better. And CASA ratio, that is current account savings account deposit to total deposit, is at 29.4%. Management has done a commendable job in regards to bringing in trust and hope over the bank and thus attracting new deposits. Yes Bank in recent quarters started making real money, aka a net positive, and the bank earned the highest profit since 2018 in Q2 financial year 2022 of about 225 crores. Yes, obviously it's less, but see the trend. Yes Bank since March 2020 has shown a tremendous improvement, but a long way to go. The current return on asset is at 0.32%, return on equity is at 2.69%, and earnings per share is at 0.09 per share. And when it comes to IMPS and UPI transactions, Yes Bank is the market leader with 44% market share of $3 billion monthly transactions. Technical analysis. Yes Bank has too many free float equity shares and most of it is held by retail investors. Slowly but steadily the trend here seems to be picking up, but patience is extremely important and this stock is not for traders. Both RSI and MFI shows a mid-range and average movement. If Yes Bank drops below 12.5, the next low is at 12.1. I don't see Yes Bank dropping below 12 as of now, and Q3 result may change the pattern. SWOT risk analysis. Opportunity and strength. Number 1. Since reconstruction, Yes Bank has seen a steady improvement in liquidity position. Number 2. SBI remains the largest shareholder of Yes Bank with 30% shareholding. Number 3. Asset Reconstruction Company ARC is proposed to transfer its pool of stressed assets, thus shifting NPA load off the books. Number 4. Yes Bank Limited has taken shareholder approval for raising capital up to 10,000 crore, which could be instrumental in addressing the potential asset quality stress. Number 5. Considerable improvements in deposits are seen. Weakness and threat. Number 1. Exposure to stressed telecom company remains high. Number 2. Asset quality pressure is expected for a few more quarters and the pandemic is making the situation worse. Number 3. Slippage in loan book advances affecting the profitability of the company. Conclusion. I have been holding S Bank since its March fiasco. I entered the bank when it was selling in single digit, and thus most of my holdings are locked for now. And I have no issues holding on to the company for a long term, say 5 years or so. Does it mean I'll add more? No. Unless I see some real improvements, I rather stay put with my current position. For any company, management is very important. In Yes Bank's case, it had lousy and corrupt management, but now that has changed. With that, even efficiency is seen. You can't compare a dying bank with some of the well-established banks in the industry. But if you want to compare the current S Bank, you have to compare with the one that was a year ago. The improvement in its books are appreciable, and it's very well noticeable. Overall, I'll give 7 out of 10 rating because the efforts made by the management, and I see a potential in this bank. Hence, I have invested in the company and wish to hold for long term. That's it for today. Thank you for watching.